This is Jordan. This video is being recorded on the afternoon of Friday, February 9th, 2024. Thank you so much for tuning in. In this video, going to recap the precious metals this week. And it was a rough week for precious metals. So let's get into it. Now, starting off here with the daily bar charts, gold at the top, silver at the bottom. And what we're seeing is concerning. Silver here, I noted this in a past video. It's had all these bounces from 27, and 1, 2, 3, 4, and here's the fifth one. The last one didn't even make it up to the 200-day. So I definitely see some risk that it could break 22 and come down here. We'll have to look at the COT and those types of things, but the COT is not at a bearish extreme yet. So there's definitely risk that this could break 22. I would be really surprised in the short term if this had the juice to surpass the 200-day here. I would be surprised if it even tested it, but that's probably in the very short term here the best case. So I do think right now the path of least resistance is going to be down below this 22 support. Now for gold, this, looking at gold in a vacuum, this looks bullish. I mean, we have this handle on this huge cup and handle pattern. So the handle here going back 3.5 years. And, this also looks like, this could be a cup and handle or some cups here. I mean, you have this could be a cup. This looks like a bullish consolidation. So this in itself looks like a potential cup and handle. However, looking at silver, silver is not confirming gold's potential to break out, in my opinion. So again, looking at this in a vacuum, it looks bullish, and this is a bit of a consolidation here. I mean, again, this is a bullish consolidation. It's holding above, 2,100. So it's probably holding. I mean, it's probably retraced 38%, maybe a little bit more. And again, this is bullish consolidation here. I mentioned the importance of 2,000 weekly support last week. The 200-day is right here, right below. But I don't think it's a given that this is going to break out to the upside. I hope I'm wrong, but I am worried about this breaking down like that. So we'll get into the weekly chart here. And we can see, so silver holding 22 so many times. I mean, looking at the weekly chart, there are some potential bullish hammers here. So, maybe it's these hammers are enough to signal that the market will bounce one more time above 22. But ultimately, if it's going to break below 22, you're probably going to see it come down here and test, what is that, 2050 or thereabouts. Gold, resistance is clear, 2,100. Gosh, it's so close to breaking above 2,100. But, the last one showed the potential flag consolidation or the bullish triangle. So you have this bounce above 2,000, couple more here. So who knows? Maybe this continues to hold 2,000 like this. Or, again, the bearish scenario is maybe it tests again, rallies, and then breaks down. But here's the thing, guys. Even if gold were to come down here to 1,900, I mean, this would be a higher low. So that doesn't change the bullish prognosis. It would be painful to see it, come down another $140 or so. But just keep that in mind in the very big picture. But so it's not a given that this is a bullish consolidation yet. I need to see another test of 2,100 to think that. Okay, so wrapping things up with the stocks, just going to look at GDX and GDX with the breadth indicators below. A few of these are not updated yet. Looking at the price action, I mean, this is concerning. 29, I mean, this has been a key level for so long. And you had right here a bit of a failure, sold off, snap back, retest, failure until you have the breakdown where this is probably going to continue to trickle lower. until the breadth indicators get really oversold. So these vertical blue lines, I marked the points when these breadth indicators were really, really oversold, and those tend to coincide with, you can see here, important market lows. This is interesting to me. This is not updated yet. I mean, the new highs divided by the new lows. So you have minus 14 for new lows, and you can see, I mean, when you have a significant low, you get blowouts in the new lows. Like there's a day when 30% or 40% of the GDX stocks are making a new 52-week low. I mean, that often tends to be a significant low in the market. So again, minus 14, not updated yet. So we'll see. I don't know. Maybe it's at minus 18 or minus 20 now. But this is one to watch. And then these haven't been updated for a couple days. These are my Huey indicators, percentage of the stock. Huey stocks close above the 20-day, 50-day, 200-day. Again, haven't been updated for 2 or 3 days. And look, when you see these get below 10%, you start to get close to a buy signal. These are stock charts indicators. I like these. I mean, the Bullish percent index. It's also a breadth indicator. I mean, this is down at 25, not updated yet. So you look at the price, and, there's probably, I mean, this is a potential support level here. I'll have to take a deeper look at where the support might be. I mean, you do have this low right here. So that could be a potential low, but we also have to look at these breadth indicators. And look, just wait for them to get really, really oversold, and then you can be a buyer. It's going to happen. It's not going to happen the next week, maybe the next couple weeks, maybe next month or two, but it's coming, and that's when it's going to be the time to buy. All right. Thank you so much for tuning in. Leave a comment. Let me know what you think. Rough week. Hope everyone has a great weekend. Hope people enjoy the Super Bowl, and I'll talk to you guys again next week.